Good evening, everyone. This is James coming to you from Dividend Stock Talk, where we talk about dividend stocks and dividend investing. And what do we do that for? We do that for monthly cash flow. And I got something going on with my computer. Imagine that. It's not moving down like it's supposed to. There we go. All right, today is November 16th. It is 11:14 p.m. Tomorrow's Friday, the last day of the week. Options expire, weekly options and monthly options. Hopefully you're on the right side of the trade because, the stock market did have a couple of erratic moves just recently. So hopefully, you guys are good to do it. And with that said, let's jump on and see where we are, see what's going on, and see what kind of moves we have to make tomorrow. All right. This is our dividend trading account where we just capture the dividends and hopefully earn a little bit of cash while we're at it. Look at that. We're up to 7.8% return. This traded with $100,000, so anything under here says year profit to date. That would represent in the percentage for the month. Not the week, but for the month. Actually, sorry, for the year. So far at 7.8, that's 700 times the amount that banks are offering. Banks are offering a 1% for a CD. I saw that today on a big, huge billboard driving down the road. Like big, huge billboard. Come get your interest now, something like that. 1.25% for the year. Really? Okay. That being said, let's see what we're looking at. DFS. Where are we with DFS? Looks like everything is still a little on the downside for year-to-date profit and loss. We're off by 137 bucks with DFS, so we're going to be out of that one pretty soon, which is a good thing. We still got to work on our collecting of our, our dividends. Yes, same with Lowe's. So where are we with DFS? DFS. There we go. Discover Financial. Let's Discover Car. Don't leave home without it. Wait a minute, that's American Express. Don't leave home without it. All right, we only got 100 shares of this one. So why are we even bothering with this? I don't know. Anyway, she started out the year with 65, 66. She quickly made up a move to the high of the year, which was 75, 25. Comes back down right on the 69 area, and it goes in like a little bit sideways between 65 and 71. It's like a $6 move, not even 10% move between that little sideways trend. From there, she dropped down to the 59.60 area, and it trades there for the rest of the month, trying to get back up to 65, where we are today at 64.82. Now, what do we have DFS at? DFS, we're looking at last week. We got DFS 100 shares at 66.19. Where are we now? See, we're a little bit off because that's 64.82. We had a down day today, but yesterday we had a good day. That's a good day. I like that. All right, DFS were down 45 bucks today, down 147. It's only 100 shares. That's down quite a bit, I have to say. If it was like 5,000 shares, then down. Yeah. Anyway, DFS, Discover Card, Lowe's. We all know who Lowe's is. We got Lowe's at 81.75. LOW for Lowe's. Okay, Lowe's started out. That's funny. Lowe's started out the year at the low of the year. That's cute. Wonder how often you can actually use that phrase. Lowe's is at the low of the year. Back in what was that? A year ago today, she's at 65.71. That's the low of the year. She jumps up to what looks like a trading range, and there's a support here. You get down here. You get a bottom here, a bottom here. Almost got a bottom there, and you get another bottom here. So that's like a triple bottom. Then she jumps back up, retraces about 1/3. She goes back up again. How far is she going to go up? Don't really know. But let's look into it. We're into Lowe's for, wasn't it? I forget. New trades. 81.75. She's at 79.47. 81.75 is not hugely off, but it is still off. All right, so she's up today. Lowe's, gotta like that. Lowe's is a dividend king. Okay, she's increasing their dividend payments to the investors every year without fail for a minimum of 50 years. All right, so that's Lowe's. We're good to go in them. So take that's good. You're right around Christmas time, and Macy's is up. Lovely, it's up 400. On the whole bucks, I'm still down 19,000 for the year. That's my biggest losses. These two are here. Okay, so Macy's. Let's see where you are. Macy's, as we said last week, she had to almost double in price in order for us to reach our target. That's how crappy we were picking this one. Not really us in particular, but for what's happening to the stock, and nothing we had to do with that whatsoever. All right, she starts out at 42 for the year. About a week later, she was at 45. That's the high of the year. Then she slowly drops down, so it clearly looks like a tabletop. This thing's just like a stair step. You know, from here, one step, two step, three step, boom, you're on the floor. That being said, she stair steps down to 29.30 area, then steps down again to the 22, 23 area, and then one more step down to the 2021 area. So she's at 20 now. So you see she's been up for the last week. You know, one day down and 6 days up. That's what I like to see. Well, especially you can see that this time of the year because, hey, it's Macy's. Who knows? All right, anyway, we got 1,600 of those. We collected the dividends 3 times. So maybe come February. That's not right. There it is. All right, we collected the dividend 3 times. So she should be collecting the dividend again in February, I think. Anyway. All right, that being said, SKT, we already went through them, didn't we? SKT, yeah. 29.93, she starts out the year at 34. Quickly finds the high at 37, then back down to 33, 34 area, drops almost 30%, and trades at 25 for about 3-4 months. Drops down 24 for 2 or 3 months. Now she's at 24.93. And we're into SKT at, here we go, that 32.88, right there, that number, 32.88, and we collected dividends on it 3 times. Ooh, gotta collect dividends again, I like that. All right, that's basically all it is with this account here. We're gonna jump over to the options account, and to be totally honest with you, I haven't looked at it in a couple of days, so I have no idea what it looks like. Isn't that sad? All right. We got 4 positions, AMAT, that one, and our overall year profit loss to date is 87. I hate it when it does that, because look at that, AMAT is up 15,000 for the day, which means now I get, oh crap, I sold it. I sold the option if someone would buy it for me already. Oh well. So that number is not actually right, because once I get rid of that, at a loss, not a huge loss, but I am making money off of it because I sold someone the right to buy it from me. Let's look at the trades on this one. Come on. New trades. All right. We got this at 56. Uh-oh. We got this at 56, and I could have sworn I tried to sell the option on this, but there's no option position. So you know what? I'm selling this thing first thing in the morning. Create a closing order, sell at 58. Now I bought this thing at, I don't even know what the heck I bought this at. 58.80. Looks good. So 58.80, there you go. That one's off to the races. All right, so that one's off to the races. See how that looks. And then, sold that. What do we have? BK here. View trade. All right, we're into it at 52, and we sold somebody the 52 calls at 50 at where's BK? I didn't even put it in yet. BK, there you go. All right, so BK is at 79.47. Okay, she started out the year at the low. Oops, wrong one. There we go, bang up balance. Okay, so let's start that over again. My computer's going slow, so it gave me a false reading. So BK started out the year in a trading range right here, 47, so between like 46 and 48. So right in the 47 area, she does the that 6 or 7 months going sideways basically. She found a low at 43, a quick drop, like a 2 or 3 day drop down to 43, and then she jumps up to back to that trading range of the 42, the 43, 47, 47, 48 area. From there, then she jumps up to another trading range, right in the 52 area, and goes sideways, finding the high of the year at 55.33. And where do we have BK? BK, we're into BK at 52. We sold someone the right to buy it back from us at 52, and she's at 52.23 right now. So this tomorrow, see you later, you're gone. Lovely, get rid of BK, I like that. All right, DWDP, that's Dow DuPont. DWDP, it's at 70.68. Let's see where we got it. She jumps in for the year. She starts off the year at 52.84, which is the low of the year. From there, she has no place else to go but up. So she's up. It's not really a stair step. It's like a mountain peak. You climb one peak and then you climb another peak, and climb another peak, and then it just keeps going up. Could this be another drawback, then another shoot up again and follow suit like it has been all year? You never know. All right. That being said, where are we with DWDP? That's Dow DuPont. Come on, Dow DuPont. Here we go. Where'd you go? I don't know what's wrong. It keeps on skipping. There we go. DWDP. I have no options against this one either. So I can sell this one at the exact same price also. Okay. Now, I don't normally buy the shares in this account. This account is basically for, what do you call that? For just options alone. I hardly ever buy shares themselves. And for it to jump up that high overnight, that's a fluke. So the number that you're going to see for the year-to-date return, profit, return on investment, ROI, yeah, for the year, it's going to be skewed because this has happened to me 2 or 3 times this year where I sold the option. Instead of just collecting the premium, the option, and moving on my merry way, sometimes I'm stuck, literally stuck. Well, I shouldn't say stuck, but it's best financially to go ahead and buy the shares once you're into a certain position. It's kind of like a point of no return. When stock goes a certain way, then you decide, all right, wait a minute, do I save that money, that small little percentage, and hold on to this thing for a couple of days or a week or two, or do I let it go? So it's one of those things you have to weigh out. Where there's more risk, there's more reward. But if you want to just play it safe, just do the dividends. Now, covered calls are very, I'd like to say almost risk-free. They're one of the few option trades you're actually able to do in your IRA. But it does double, triple, over, sometimes even quadruple your returns. If you're getting 1 or 2% from your bank, which just about everybody is if you're lucky, then you can basically just say, hey, let's incorporate some options into these trades. I like over here, look at this. I like DWDP right where she is, right? She's at 70.68. She's got a good dividend coming up. And actually the dividend is this week, I believe. Not this week, but this week coming up. So we should be out of there by then because it already moved up some. Do you hold on to it for a little bit longer because you get the dividend coming up? So the dividend's coming up and the stock's coming in. And look, the chart doesn't really look that bad. It could actually be like mountain climbing. You jump up, you get a peak retracement of about 25-30%, and then you got to get in. You go up, and it's a retracement. Go up a little bit of retracement. Go up, that's a bunch of retracement. That's like 100% retracement there. And then she just jumps up, jumps up, retraces. And then where are we now? Because you got like a triple bottom here. You got a bottom here, bottom here, bottom here. And she's bouncing off that bottom. Let's take a quick look at that. See? 1, 2, 3, triple bottom. So where's she going to go? Maybe she'll come up and give you some head and shoulders. Who knows? Like maybe up to 72. You never know. Or she could do like she did last week. Go from 67, 68, bounce up, So from here, 67, 68, bounce up to 72. You never know. It could be the same. It might not be the same. It could be down. It could be down. Only one who really knows which direction it's going to go is the market maker, and he's not telling anybody. At least he's not supposed to be telling anybody. All right. All that being said, let's check and see if we have any questions. I can help you guys out with your own trading. If you don't already have access to the software that we have, it allows you to find out what stock is going to be best suited for this type of trade. This type of trade, plain and simple, double, triple digit, double, triple your returns just by using simple strategy and safe strategy too. Because remember, the only stocks we actually invest in are those stocks that we wouldn't mind having for the whole year. You know, DuPont, AT&T, General Motors, Ford, Microsoft, Apple, ExxonMobil, Chevron. You know, there's so many different companies that have been on. I forgot how can I forget Kellogg's, Dollar General, and I was going to say Sears, but no, Sears used to be a good one, but not anymore. Right? Walmart's the thing nowadays. All right. All that being said, let's check for our questions. If you've got any questions, we'll answer them. If not, we're going to jump on out. But hey, you guys get a chance, go check out the website, the10minutetrader.com. We're still working on dividends for cash flow, the website. Now, that way show you how to do all the different trades based on the dividend, and you collect the dividend, and what's the next company to collect the dividend. A lot of people say, why do you do that? So many profitable ways of making money. There are more profitable ways of making money in the stock market, but you find something and it works, then you stick with it. Other than that, why take the risk? Here I am going to give you advice on something that may work or may not work. The dividend stock, you can only buy the stocks that have 25 years or more of increased dividends, a nice historical pattern. Some of these companies that we recommend, or I shouldn't say recommend, that we look at, and I find favorable and not favorable, they've been in business for over 100 years, making the same products year after year after year after year. It's kind of like job security. That's a good way of looking at it. All right, so think of it that way: job security with your investments. Your investments are going to work for you, going to make you a nice return. If you're not looking for double, triple digit return, look for the 1%, 2% per month. Okay, simple, easy to do. Covered calls, covered puts, credit spreads, debit spreads. There's a few of them that are very simple and very safe. You might want to think about doing. That being said, let's check to see for questions. All right, no questions. So that basically means I am out of here for today. I'm going to catch you guys tomorrow, right around 3:30. Now remember, 3:30 is when options expire. You know what? Before I sign out, options expire tomorrow. So let's see what DWDP's options look like. All right, it was last at 70.68, which is right here. Now, if we're going to sell, we're going to sell it for 22 cents a piece. Sell for 22 cents a piece. That's not a whole heck of a lot, but it's kind of like guaranteed. That's that money, and then they turn around and buy it for you at 70.50. So let me think. If I sell it tomorrow, I'm only collecting 4 cents times 5,000 is like 1,600. Is that right? Okay, that works. All right, so let's cancel those because they expire tomorrow. Why do that? Cancel order. And this one. Okay, cancel that order. Yay! All right, let's go back in and trade them again. DWDP. Sell those. Now we have 50 contracts, remember? So let's do the 50, and let's see what we are getting at 20 cents a piece. Look at that! I get a credit of almost $1,000. That's pretty cool. It's like a 1% credit. Actually, more than that, but 1% of the total package. We started with the total package with 100,000. All right, that is on its way. All right, let's do the same with the other one because that's an extra $1,000. AMAT. Click on that. Create create a duplicate order. No. Let's not do that. What are we doing? All that effort. Let's just go to trade. AWDP, is that right? What is it? Now that's sad. I don't remember what it was. Yeah, AMAT. How can I forget that one? AMAT. Well, AMAT looks pretty good. We just sell the option on that one. And then sell it tomorrow. That would be nice. Alright. AMAT. AMAT, like I said, it's a 57. We got those options. We got 50 contracts. So let's just sell the 50 contracts. The 57.80. Closest one right here, $1. Nifty. Alrighty. 50 contracts. And that would be $4,000. An additional $4,000. So what I'm going to do is sell those first thing in the morning, and then turn around and sell the stocks at the end of the day. Or hopefully they'll be called out. That'd be great. All right, this is James. Checking out from the Dividend Stock Talk. If you guys have any questions, please let me know. Other than that, we're going to catch you tomorrow around 3:30 once the options expire. So here we got BK. I think somebody's buying